Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is January the 10th, 2020. Strong hand. Golden Age 2020. Bitcoin is the next Bitcoin. In motion. These guys are in motion, baby. All right. Value your wealth in Bitcoin. Don't FOMO on altcoins. I'm offended by something. I've got the conviction. We got a new show here every freaking day. And now an international panel has been assembled on this great day. Brad Mills is here. Simon Lelyveld is here. They're both making their debuts. And Jeff Andrew, you guys are familiar with him. He's coming in from the United States of America. Now, we're going to start it off a little bit differently today because we got two guys that maybe some of you you're not familiar with. Brad is all over freaking Twitter. So we'll start with Brad Mills. What's your story?
Hey, man, thanks for having me on. My story, I'm an entrepreneur, a serial entrepreneur. I guess that means I fail a lot at starting businesses, and then I got lucky with Bitcoin. So I had some experience in gaming and made some games on Facebook, and then kind of knew, virtual currency made sense to people from running a Facebook game business. Found out about Bitcoin in 2011, started mining in my basement, and Bitcoin was crazy volatile back then too. So then I kind of just held, and then went back to my game business, and then I got doxxed, and so that's why I have the proof of the January 3 key thing on my name, because I like to spread that message of Trace Mayer's proof of keys. Yeah, because that sucks to lose your Bitcoin when you're that early. So anyway, I got back in. I started investing and held through the craziness. Started a podcast last year, and I did some analyst work for a fund in 2017, and mostly now I'm just holding, investing, and playing video games.
All right. You said you got lucky there. I don't agree. You were in early. You learned about it. Now, how much percentage-wise? How much did you lose at Gox? All of it, or?
Pretty significant. Probably 80%.
All right, but so that 20% that you kept, I look on the positive side. You still have that 20%, right?
Oh yeah, for sure. So the 20% was enough to keep me interested in the space. So when I had my game company going in 2013-14, but I still had my Bitcoin, and I started mining again once I lost it in Gox, because I was like, I got to get my stack back, that I lost in Gox. So I started mining again, and took the rest of the money that was in my company's bank account and invested it in Bitcoin mining so that I could get my stack back in 2013-14.
Wait a minute, see, that's not luck. That is not luck. That is conviction. You held your Bitcoin, and you also used company funds to get more Bitcoin. That's not luck. That is, I love that. So don't people say, oh, that guy got lucky. No, he didn't get lucky. You had a strong.
Yeah, I guess you're right.
It was conviction. It's all about
holder of last resort that just sells the top.
Yeah, and you learned a lesson from Gox.
At the top.
You learned a lesson from Gox. You never did anything that silly again, keeping 80% of your Bitcoin. Letting someone hold 80% of your Bitcoin is
never trust Roger Ver. That's what I learned.
Oh, pound that like button, people. All these dudes are linked to below. Okay, let's start. Now, Simon, let me talk. Before Simon tells us who he is, I want to say one thing. He is in the Netherlands. The Netherlands is a country. I have many followers from the Netherlands. Boris has been on the show. Aaron has been on the show before. It's big over there. They punch a mighty punch for a little country. Okay, so what goes on in the Netherlands is important. And we're going to talk about the regulation situation over there. And Simon actually is the expert in this, in EU and Netherlands regulations stifling our great Bitcoiners there. But tell us a little bit about yourself, Simon.
Okay, Adam. Hi. Thanks for the invitation. Good to be here on the show. All right. So if you trace my involvement with e-money back to its origin, it's about 20 years ago when David Chaum introduced eCash. That happened in the Netherlands, and at that point in time, I was working for the central bank as a supervisor. So we had the issue: what do we do with this internet money that comes around, and should it be supervised? Yes or no? So I was there at the birth, not really of the Bitcoin, but at the birth of the European regulations that cover electronic cash and what you call stable coins in the US, we call e-money. So we developed a specific internet cash regulatory regime, which is called an e-money regime. And I was basically involved in the banking sector in a number of roles with banks, with the central bank as a supervisor, and now as an independent regulatory consultant. I help out companies comply with regulation, understand where all this regulation comes from. So I'm sort of a dinosaur when everyone said, well, I'm from the age where when Chaum introduced his e-money on the internet, it was like, oh, it's still centralized, yeah, but we don't have the bandwidth and we don't have the capacity to do it decentralized. So when technology allowed for that, Bitcoin popped up as the missing species that was still there to be developed. So to me, it was like, oh, all over again, we get the same questions. New technology, new money on the internet, and the question how to regulate. And yeah, we've been pretty busy in worrying about that in Europe. And today marks the day, the 10th of January marks the day where all countries in Europe should have implemented the anti-money laundering provisions of the so-called Fifth European Anti-Money Laundering Directive. But not everyone succeeded, and not everyone did a proper job. So that's the fun of being in this session today.
And it's amazing that I scheduled you for this day. It just worked out perfectly. So that you're going to be talking about that in a few minutes. It is amazing. I mean, you've been around this space for a really long time. I mean, when did you get your first Bitcoin then? I mean, you've been around for a while.
Yeah. Okay. So Ian Grigg, I hooked up with Ian Grigg very early on in the 90s here in Amsterdam. And he already had a public key cryptographic cash system working with smart contracts. Literally smart contracts, hashing contracts, putting the key over it, and then exchanging coins, all that stuff. So those were the early days, and Ian actually in 2011 or 12, he popped me a line. He said, there's this Bitcoin stuff going on. So I immediately went about it, looked at it, and said, no, this is not going to happen anyway. It doesn't have sufficient power base. This will not fly. For many reasons, I said, but I said exactly the same about the euro. So Bitcoiners shouldn't worry. I have the same belief that the euro hasn't got a proper power base as well. But it takes some time before we discover it, or it's 40 years in time. Who knows? Anyhow, I was my first Bitcoins. I think I did a tour for the company Bitonic, one of the Bitcoin exchanges here in 2013, and they paid me in Bitcoins. So I guess that's where I started.
All right, that is great. You were early on getting paid in Bitcoin. That must be a great feeling. You've got like, they'll pay me $200 worth in Bitcoin, and now that Bitcoin is worth a lot more than they paid you back then. So that's always a good feeling. Yeah, people remember, get paid. A lot of people complain, I can't buy it. Well, earn it. Have somebody pay you in. All right, Jeff, you've been on the show many a time, but so everyone's familiar with you. But say what are you up to, and just welcome back, of course.
Yeah, great to be here. I run keykeeperira.com, which is basically a product where you can use IRA or 401k funds to buy and hold Bitcoin, but do it in such a way where it's non-custodial and you can actually hold your own keys. So that's what really differentiates us from most other, Bitcoin IRA type solutions that you see out there today.
And he also writes controversial articles about post-capitalism, and we will be discussing that.
Where's that? What's the link for that, or the name of it?
The Post-Capitalist? What was it called?
Where do I write? It's just on Medium. Yeah, if you check out my Twitter profile, there's a link to my Medium, which will be down in the show notes.
Yeah, and it's linked to below. It's already down there, the Post-Capitalist Future. A Post-Capitalist Future.
Yeah.
Okay. Well, before we get into a post-capitalist future, let's talk about the regulatory present here. Now, on CoinDesk, they actually bring this up today. Deribit, a Dutch derivatives exchange, to move to friendly Panama. AMLD5, European crypto firms brace for higher cost of AMLD5. which is supposed to take effect today. So we're going to start off on this. This is, and a lot of Americans are saying, why do I got to hear about this European regulation? It is important. It could set the stage in America. It's something that isn't good for little crypto companies. And I believe Boris brought this up on a past show, and that's why he recommended that Simon come on this show. So Simon, tell us what this AMLD5 is, and why, and how the Netherlands is really taking it to an extreme level from what I see.
Okay, well, I think in the US environment, you're pretty much aware of the sort of the F ATF rules that are being hit on exchanges with the travel rule and all that stuff. So that's sort of the international dimension where all governments together say we're gonna make sure that all crypto players are being properly regulated, supervised, or licensed. That's where it starts. So everyone has to do this in their own country. Already in the United States, you said for the crypto players, well, you're arguing for the ICO stuff. Like, is it a security, yes or no? But for the currencies, you're saying this is money transfer business, so get regulated or get your BIT license. So you've organized your licensing stuff properly in the US. Now, what happened in, well, sort of. But anyhow, so what happens in the European side of it? In Europe, we said, well, this isn't currency, this is money transfer, it's nothing. So the currencies themselves haven't been regulated as securities or payment instruments in Europe, but they needed to be regulated for anti-money laundering purposes. So the AMLD5 is our sort of European F ATF rule, saying anyone who holds custodial wallets or exchanges cash for crypto needs a license. Or that's where they started. And when working on the directive, they said, no, it's not requiring a license, it's just a registration, because everything else would be too much of a burden. So the European rule on anti-money laundering is get your registration, get your anti-money laundering rules in place, and that's it. Have fun and go on with your business. That's sort of the idea in Europe. And now what turns out, each member state then has 1.5 years to implement the rule in local law. And that's where local governments and politicians take over, and local central banks take over and say, yeah, well, we don't care what the European directive says. We just go notch, we up it a notch. So the Dutch central bank said, no, we don't like this registration. We really want supervision. Our local Council of State says, our Supreme Court says, that's not doable. It's forbidden. You shouldn't do it. But the politicians said, we don't care. We just move on. So you get this license regime instead of a registration regime, meaning that your costs are way more than with a registration. And that means that you're killing off the smaller players in the market, leaving the market open for big US companies, big tech companies. Anyone who has the funds can basically grab up the European market, and the supervisors in Europe kill off the local European initiatives. And that's really a shame, because at the moment we're in a phase where the European Commission is asking everyone in Europe, how should we do supervision for crypto? They haven't answered that question yet, but by preemptively going further than this in this anti-money laundering area, there's only big companies left in the future. So that's sort of a very brief summary. Feel free to.
How much is this costing these small companies? How much is the regulation costing companies, do you think?
Okay, so if you would take a very simple version, if you would only do money laundering procedures and stuff that comes with that, your compliance cost that you would have to make internally would be about 1K per year. And there would be out-of-pocket cost to the supervisor, which is 25 to 50K euro. So in the simple version, you'd have 150,000 euros to pay, of which 50,000 out-of-pocket. But in the extended version, with a licensing regime, there's going to be this repetitive license payment of 50K per year. And the rules are stricter. So your compliance costs are going to be another 100,000 per year. So you can you're around 200 or 300,000 euros a year, of which 50 or 75 out of pocket, and the rest is cost for compliance and stuff. And that's because you have to, well, do all the extra stuff for the licensing rules.
Wow, what a hassle! Now, what country is doing it the best? You said France is doing a good job with this, actually.
Yeah, well, France is doing quite a nice job, because the French, they basically said, well, here's the corridor for registration. If you want the registration, go to the left. But if you voluntarily want to go for a license, because that gives you a better standing in the market, feel free, go to the right and then pick up your license, pay for it, and so companies can choose. So the French literally implement the directive properly. Because each company can then just say, well, I'll go for the registration, no need to go for the license. And in the Netherlands, there's no choice to just go for a registration. I mean, they labeled it a registration, but it's like labeling an elephant for a crocodile, and then saying no, it says crocodile, it's still a crocodile. I mean, it's putting a label on it that's not true. So. Yeah.
So where do you see this ending with the Netherlands? Are there going to be a lot of companies leaving, just like this one company just left?
Yeah. So a couple of companies are now saying, well, their bit is saying, well, given our market focus, we can also transfer our business to a different location and continue working, because they are located in the Netherlands. And one of the criteria to need a license is that you're located in the Netherlands. Even if you don't have Dutch customers, if you are in the Netherlands, you're gonna be hit by the regulations. So they said, well, we'll just move our shop. A couple of smaller players are closing down and considering moving. So we have already 4 or 5 players in the Netherlands having outlined that they're moving, and some more will follow. But the regulatory debate in the Netherlands is not at its final moment yet. We still have the Senate in place, and if we're lucky, the Senate will ask the fundamental questions: is this lawful? And they can ask, on a specific provision, they can ask our Council of State, please review this once more and tell us whether this is lawful, yes or no. And the hope of the industry is that the politicians will ask the question, is it lawful? They will ask separate advice from the Council of State. And I'm completely certain that the Council of State will throw the whole law in the shredder, because they already said that this was forbidden, what's happening right now. So that's the only way out, and otherwise we just need to live with the new rules.
Oh, Ralph, bureaucratic nightmare here. Well, hopefully it does get shredded up and it goes. It seems like I mean, is this the worst regulation of all the EU countries, do you think?
Well, Germany is even doing is outpacing the Netherlands. In Germany, they went even one step further, and they said, well, actually, Bitcoin is like a security. So they basically say you need to be a financial company, you need to have a financial license as a broker or an investment or securities broker to be in there. So the Germans are even giving their industry a more hard time.
Now, by the way, everybody, his article and information about this, it is all linked to below. Now, other panel guests, I want you to get a chance to speak here. Do you have any questions for Simon? Any comments on this situation?
I guess the only question I have, sorry, you go first.
No, man, you go. I'm still reading. I'm still like on Twitter reading.
Okay. I was going to say, does this apply only to companies located in the Netherlands, or does it apply to every company that serves customers in the Netherlands? So in other words, Durbit's moving to Panama. Are they going to be able to serve Netherlands customers?
No, they're not able to serve the Dutch customers. Wow. They weren't doing this right now. So
gotcha.
So, but the thing is, if you're a US company and you have a foothold in Europe and a registration, you need to acquire registrations. But if you don't have a foothold in Europe as a company, under the Dutch law, you cannot serve Dutch customers.
Gotcha.
Or if you're a US only company with no foot in Europe, then you're just forbidden to have Dutch customers.
Wow. So does this create a situation where it makes sense for, I guess, these companies to try and locate in whatever EU jurisdiction has the lowest level of regulation? Because then they'd still be able to serve Dutch customers?
Yeah, there's the thing that you would have to do is you would not have to focus on Dutch customers. So you set up shop in Belgium, for example, but you don't focus on Dutch customers. That means that Dutch people come digitally to Belgium, and you're not inviting Dutch people. So you cannot advertise on a market. You cannot put in that's Dutch. So you really must say, it's a European play. Anyone is welcome. It's not focused on any market specifically. It's for the whole of Europe. And then anyone who comes at you can be served from this one country. That's sort of the trick that you have to do. Okay, but that means there would have to be some smart Dutch citizens that would get the wink, wink,
and know to deal with that company. They couldn't be targeted, but they could still deal with that company. Okay, that's interesting. Now you mentioned Germany. I've got a German question for you. That they're the strictest, but at the same time we heard that, and maybe this is that banks there will be able to sell Bitcoin, and I thought that was a positive. I thought, but it looks like the reason that is because they're the ones that are going to be able to afford these licenses and deal with all the regulation, I guess.
Well, the reason is if you qualify Bitcoin as a security, then you can't put the Coca-Cola share apart from the Bitcoin because they're both considered shares. So if you qualify the Bitcoin as a share, and banks are allowed to deal in shares for their customers, then they are allowed to deal in Bitcoin for their customers. That's because they chose the highest qualification for the Bitcoin and put it in the bracket of this is equity, this is shares. So anyone who can deal with shares, basically every bank, can also issue them or send them to the customers. So that's why the positive thing in terms of banks step into Bitcoin is basically a bad thing, because it means everyone else needs to step up to the bank level of supervision and supervisory rules to join the game in Germany.
Okay. All right. Well, we will keep an eye on all this. Brad, any comments about this before we move on?
Well, to me, like, this seems like a huge problem. It seems like, I don't know how bad. I actually thought that the market was going to kind of react negatively to this when it came into effect. Because from the way I understood it, like, Bottle Pay was the Lightning Network tipping bot on Twitter that a lot of Bitcoiners started to cheerlead and adopt and use, and Bottle Pay got a lot of growth. But then they announced a couple of weeks ago that they were shutting down because of this AML5 or whatever the heck it is, because it even applies to non-custodial wallets.
Yeah.
So,
yeah.
Then I started looking into it back then, and I remember seeing Samurai Wallet's strategy, which, you know, Samurai Wallet is one of the main fungible cheerleaders for Bitcoin, like fungibility, privacy, mixing, all that. They said their plan was to not be in any EU member state when they tell them to go beep themselves. See, I didn't swear.
Yeah.
But they did. And then they said, we will not and cannot comply with AML5D. So that was back in March when this discussion was going on about all the different ways to avoid KYC while using Bitcoin, or how to acquire Bitcoin, you know, by, you know, mining it, getting it from friends, like working, getting paid in it, whatever. And then the discussion came around to these crazy restrictive laws in the UK or in the EU. So how do these companies plan on dealing with this to not comply if they don't want to comply? How do we resist this? That's my like.
Yeah, well, I think if you're in the current European or Dutch environment, there's like a sort of an announcement by the supervisor. We dislike Bitcoin. We don't feel you can do this properly and securely. And as a result, if as a Bitcoin company you want a bank account, you're being scrutinized by the bank. So everyone in the Bitcoin community and in the industry basically already has those anti-money laundering rules in place, because if they don't, they wouldn't even get their bank account. So there's one layer of regulation that the Dutch community doesn't care about, which is effectively those money laundering rules. They have them in place already, and they just get a registration and they go on doing what they're doing. But the terrible thing here is that they get an extra layer of regulation on top of it, which wasn't in the regulation in the first place. So this base layer is doable. It's already in place for a lot of companies, and this extra layer is the one that kills us. So that's really the.
So you're talking the base layer one is just the general KYC AML.
Yeah, all that
right?
stuff. Yeah, you need to get it in place.
And this next layer is this really restrictive anti-crypto, anti-privacy.
Yeah, it's sort of put on your suit and your tie and behave like a bank rules. Those kind of rules.
So you're saying it's Dutch, but it's for all of the European Union countries, right?
Yeah. So the base layer should be in place for all in the European countries. But then you see, for example, the English, the British, they say, well, this also applies to crypto for crypto-to-crypto transactions, but that's not in the EU directive. So you see each country taking a different shot at increasing the scope and the impact of the legislation in their own way as they see fit, and that creates a myriad of local flavors, local ice creams, AMLD5, where only a few ice creams are the original ice cream, and the rest is a lot of toppings that shouldn't be in there anyway.
God.
So
Well,
so is like
Okay.
I wonder though, for European Bitcoiners or even like crypto users, whatever, if you're not even using Bitcoin, for anybody that uses any kind of cryptocurrency in the EU, isn't this extreme? Like, don't we find this as insanely restrictive for it to apply to non-custodial wallets? Doesn't that mean like any wallet on the App Store that doesn't hold people's funds has to comply with these rules by getting KYC and all that? Otherwise, they face fines and stuff.
Okay, the non-custodials are non-custodial providers are out of scope in the EU legislation, but some local countries may be different. The British, I'm not sure if they say that non-custodial wallets are forbidden, but they say the peer. I mean, yeah, it's a definition stuff. It's let's say the British have their own way, like the Brexit and all this stuff. They chose a very specific topping on top of this AMLD5 stuff, and it is indeed, I mean, undoable, strange, doesn't make sense. But you've got to understand that the F ATF is basically their decision last June with the travel rule was to divide the Bitcoin community into sort of the legislative part and the non-legislative part. If you compare it to the early days of music on the internet, everyone was sort of streaming, doing Tor, doing Napster, and now you have Spotify in place, and the regular customer wants to be in the Spotify area and not in the Napster illegal space. And that's what the FATF is driving at with the travel rule and such. They just separate out this peer-to-peer non-custodial area until it's really you can really label it fully as criminals, and then the rest of the world, which is fully regulated, is the proper Bitcoin world. That's sort of their vision behind this whole thing.
Yeah, that's a nightmare of a vision there.
Yeah, it's not my vision, I think, but it's my interpretation of their vision.
I want to see, like, where's the resistance here? Like, where are people standing up and saying, this is bullshit, we can't do this. This is, like, totally antithetical to what Bitcoin is. Is there... I've had a flu going through my family for the last week, so I haven't been on Twitter very much for the week. But, like, how are people reacting to this on Twitter with this rule happening?
Well, in the if we skip the European stuff, but go back to the FATF rule, the core idea behind these FATF rules on complying with all this additional requirements, there was a lot of pushback by the industry. There was a consultation by the FATF. Everyone was sort of up in arrears, except for the US community. And the reason being is the following. Under US legislation, cryptocurrency dealers are already subject to money transmission rules. Under money transmission rules, they should have already applied with the travel rule. They should have already sent the names of the customers with all the transactions, because they're money transmission agents, and those are the rules for money transmissions providers. So the Americans were nicely being informed by the FATF that if they were going to speak up in this whole discussion and make a lot of noise, then their local supervisors would go after them and notice that for the last 5 years they didn't live up to the travel rule.
Right.
So
for people who don't know,
US voice was silent because they knew if they were going to say this is stupid, they were going to get fined by their local supervisors.
For people who don't know about that, right? Like FATF is the Financial Action Task Force, and it's not an official body as far as I understand it. It's just like a coalition of member states and stuff that make recommendations to comply for banks and stuff to have anti-money laundering rules. As far as I know, there's no like authority that can actually enforce this. It's just suggested that countries all follow the same rules, and then the individual countries then decide whether they want to or not, and their regulators work in their own countries to do it.
Yeah, that's true. But in practice, basically, America sets the rule book, and everyone drives it along these rules. So as soon as the locals, so the whole FATF rules on travel rules for crypto were initiated by the US because the US found it important, and that means that US, even if the rest of the world won't do it, the US supervisors will immediately, after the FATF has established the rule, will immediately say it's also relevant for us, and then push it into the industry. And effectively, they told the industry it was already relevant for you as money transmitters the past 5 years. So shut up or be fined for the non-compliance of the last 5 years. So
that's why a lot of the exchanges over here started to remove privacy coins from their exchanges, because the travel rule basically says that the bank or the company has to attach like some sort of metadata or something about the transaction if they're sending it to another company or withdrawing it personally.
Effectively for each transaction, the withdrawing personally, if you can establish that it's the same person, then there's no harm, because then it's not to another person.
So then you don't need you don't need to include that stuff when it's a personal withdrawal. But they couldn't actually enforce that on the privacy coins, because they have like burn and remint and all this stuff. So they just are removing all these privacy coins from the exchanges.
Yeah, but it's a separate ball game. I think Adam has a lot more on the agenda for today. So
I want to say this though. That's why I got Simon on the show, so that the North American audience can hear about what's going on in Europe, so people can make a big stink about it. Because we know that it's usually Americans and Canadians that are the loudest screamers on Twitter about this kind of thing. And you're absolutely right. No one is talking about this right now. I haven't. I mean, Boris. If it wasn't for Boris, I really wouldn't have heard of it in the first place about this.
Well, let's not slander Canadians. You said Americans and Canadians are a polite people. Let's not. Let's be nice to the Canadians.
I don't know. You ever see Francis tweet?
Yeah,
That's true.
Francis is a rough Quebecan. What's the term?
Quebecois.
Quebecois. Yeah. That he can really. He's a Bitcoin. He's a toxic Bitcoin maximalist. But, on that topic, why don't we talk about that? That's a good transition. For some reason, again, people are. There was this Nakamoto thing that came out this week, and my take on the whole Nakamoto, it's some guys that. Are they really Bitcoiners or not? Can anyone use the Nakamoto name for their own publication? I really don't. I say let them compete. I'm not complaining. But again, it's brought up the toxic maximalist meme again, because there were a lot of guys saying, no, you guys aren't allowed to use the Nakamoto name because you're not Bitcoiners. You're not real Bitcoiners. I mean, there were definitely some. I mean. Vitalik Buterin is one of the guys behind this. So, Brad, you had a take on that, actually, I believe.
Well, yeah, I wanted to find out who was behind it, because they when they use the term "we are going to be pro Bitcoin" and then brackets BTC, that instantly smells like Roger Ver to me. Like he's trying to do a Trojan horse or something, build up a bunch of clout with a new thing, and then eventually switch it to be anti-Bitcoin, when he's actually talking about Bitcoin Cash or something else that he starts, if that fails. So I was trying to find out who's behind this, because if Vitalik Buterin is an admin in the Telegram room where they're banning all these Bitcoiners when they join, that doesn't seem like a pro Bitcoin thing. But also I look at it from the point of view of that they're a business, and they don't want to deal with all this drama right away. Who cares? It's people get censored on Reddit, so get censored on Telegram, whatever. It's just the market. But it turns out that I'm pretty sure it's Balaji that runs it, the guy that started earn.com and then went to Coinbase, and then so when I heard that it was him, I kind of had a little bit of a relief there, because I kind of look at it as levels of a problem. And level 1 would be if Roger was running it. That would be a problem. That would be a real problem. Level 2 would be some shitcoiner that runs it, that maybe has an ulterior motive to promote his coin or something like that, but he's also respects Bitcoin and is pro Bitcoin, but maybe just isn't a toxic maximalist himself. Level 3 is just a total scam. you know. So I think it's level 2 because Balaji definitely has been pro Bitcoin in the past. He left Coinbase around the same time that they hired those hackers that were doing surveillance on political people, and you know, when that whole controversy blew up, Balaji left. So I kind of took that as a little bit of a sign of, yeah, he got his paycheck, but he also has a bit of morals, and he left. And he tweets pretty much pro Bitcoin. He tweets about altcoins too, but I feel like he's genuinely pro Bitcoin. So I feel like whatever we think about them using the Nakamoto name and having like Vitalik Buterin and like Brad Garlinghouse and stuff like that, total shitcoiners like contributing, that sucks. But at least it's not Roger Ver running it. So that's the way I'm looking at it.
All right, that's your take on it. Do you think the Bitcoin maximalists who have been up in arms, have they been too toxic about this? That's been thrown around too as a counter argument, I guess.
Well, I have an opinion on that. I can say mine, but if someone else wants to jump in first, I don't want to hog the chat here.
All right, Jeff, you want to say something about this? Again, I think I don't want to spend too much time on it because it's a way. Let them run their own business, I say. I don't know the Nakamoto name, but again, it was something that happened this week. So, Jeff, any thoughts on it?
Yeah, I mean, I just don't think it's any kind of a scheme, because if there was any sort of cloak and dagger or anything here, they wouldn't have had the names attached to it that they did from the beginning, right? So I don't think there was really, the problem is that I don't think there was very much forethought or put into it. And I don't think the people that put it together were very self-aware. I think it's mostly just a simple lack of self-awareness problem, that they thought they could put this new cryptocurrency-related publication out there, try to sort of latch on to the whole Bitcoin thing while sort of playing both sides, right? So I think, honestly, that's my only take on it, is just that the thing is more defined by lack of self-awareness from the founders than anything else. And choice of the Nakamoto name is a really good example of that. Like, I just don't think they really understood why that would be so controversial for a multi-coining publication. And again, I just think that goes to simple lack of self-awareness.
Dude, pound that like button. That's a good summation of it. Lack of self-awareness. That sums up some of those dudes. But hey, that's
true. Let me jump back on there real quick. So we saw this happen with what Bitcoin did. You know, when Peter wasn't Bitcoin maximalist enough, the toxic maximalist Bitcoiners just went nuts and kind of like started attacking him and started making a big problem about him saying, like, having the word Bitcoin in the show name, and told him that he was a scammer and all this stuff because he's influencing people and he's influencing them towards shitcoins instead of Bitcoin. And I think the way that played out, it actually affected him, and he reasoned that they were right and that he started to focus on Bitcoin, and he now is a toxic Bitcoin maximalist himself. And I think maybe that's what the Bitcoin immune system does. That's what all these maximalists do. They find a foreign object in the bloodstream, and then they start to coagulate around it and try to expel it from the Bitcoin ecosystem. And that's just what they're doing with this, because it seems it's like an attack on the host. You know, like these multi-coin shitcoin guys coming in, some of them that are openly anti-Bitcoin, really, coming in and saying like, oh yeah, we're pro Bitcoin. So I mean, it sucks, but again, like, this is a free market, this is open source technology. You know, someone else should have taken that name. Anyone
could have bought it. I mean, it was probably expensive, but the immune system analogy, very good one there. Like to hear it. And all right, Simon, I don't know if you've got a take on all this gossip and stuff. Do you have any?
No. My only take is then we had earlier all this stuff about who's Nakamoto, and I keep wondering about the movie being Wolfgang Amadeus. We had this movie being inside the head of Wolfgang Amadeus. He didn't want it, or being John Malkovich. That was the movie. I keep thinking about that. Anyone using the name Nakamoto is basically throwing himself into a jungle, and just don't do it.
All right. Hey, there, Simon. There's a question for you, actually. So I got to read this because people are free to do their questions. Someone actually sent this to me over Twitter. Ask him if he thinks there will be a division between Bitcoin users that hold their coins in the regulated custodial wallets and the Bitcoiners that hold their own coins, creating a gray group of Bitcoin users.
Yes, well, if we were all going to do all this research stuff, you would really end up like in the Eastern Europe countries. Like you have the official exchange rate and the unofficial exchange rate. And there's a risk that if you succeed in separating out the two, and if regulators succeed in forbidding transactions. So at present, the personal layer, if I personally do some cash to crypto transactions and it's small, it doesn't really hit a large volume, then I'm free to do so. I'm not being qualified as a crypto exchange. I don't need a license. So there's always a layer where money and Bitcoin can flow. It's the personal layer. But as soon as they start really building the walls and stepping in a next phase of regulation, you may well end up with sort of two Bitcoins with two exchange rates. It would be really a dystopic vision, but it's not unthinkable. I don't see it happening right now. I hope it won't happen, but it's a very good question, and in some of the nightmares that would be the case. I really hope we don't get there. I really hope we don't get there. It's
nightmare scenarios. Oh, yeah. I don't like spreading doom, people. I like spreading positivity. So, guys, retweet this show so more people hear about this situation, so it doesn't come to this. Well, since we're talking about the future here, I want to get Jeff wrote a controversial essay. What was it? The PostCapitalist Future? Is that the name of it, Jeff?
Yeah. I actually wrote it. I wrote it about a month ago, believe it or not, initially, but it picked up some more controversy. Made a little splash back then, and then it sort of all restarted up again this week because I sat down. What was released this week, I did a 2.5-hour interview with Marty Bent about the original essay. So you can check out the essay. It's linked in the show notes here. And basically, I just sort of make the point that capitalism, as I see it, is more of a transitory period of development than an economic system that's designed to last over a very long term. And I sort of make the case for that and what the natural consequences of that might be going forward in the future as that system sort of winds down. And in the essay, if you check it out, you'll see that I was heavily influenced by a book by Hilaire Belloc written in the early 20th century called The Servile State. Because Belloc theorized that, when the capitalist system eventually began to wind down, it would start to resemble a more servile relationship where you'd have very few holders of actual capital that would be the only employers and producers in society, and we'd all just essentially be obligated to work for them. And he outlined a variety of different ideas in his book about how that fate could be avoided. Unfortunately, again, this book was written over 100 years ago. A lot of the ideas he came up with are going to look somewhat dated if you were to go back and read the book. So I tried to come up with some more, modern spins on that general idea. So the essay it's not short. It's about a 20-minute read. So it's, it'll take a while to really sit and digest and work with it if you're inclined to do so. But I enjoyed writing it, and I got a lot of really good feedback, both on the original essay a month ago and on the long-form interview about it that dropped earlier this week.
Did you propose what happens at the end after post-capitalism?
Yeah, so Belloc comes from an economic tradition referred to as distributism, right? So the idea behind distributism is you respect the idea of private property, but you use positive law to ensure that the property doesn't centralize. So that's really the servile state, if that's where things end up, is based around the idea that eventually all the capital centralizes in a small enough group of holders that they're able to form an oligopoly and collude against everyone else, right? Which is not that far-flung of an idea. So Belloc had a lot of ideas.
That's what we're in right now.
Right, exactly. So Belloc had a lot of ideas regarding how that could have been avoided in early 20th century England. I proposed a few of my ideas at the end of the essay. One of which, some of them were obvious, and I tried not to propose anything too radical, because I tend to look at these things as incrementalist, meaning you try to interfere as little as possible, do the least radical solutions first, and then sort of move from there. So a lot of it has to do with trying to move, control and decision making to the most decentralized level possible. And some examples I gave there. One very obvious one would be more vigorous enforcement of the antitrust law that we already have on the books, both in the United States and in Europe. I'm less familiar with European antitrust law, but in the United States, we sort of just stopped enforcing it in the 90s. I mean, the laws are still there. Just takes the political will to actually enforce them. And then for companies that, are by their nature very large or are already very large, I sort of made a proposal that is along the lines of what Germany currently calls co-determination. So the proposal that I put in there is that once a company were to get over a certain size, and obviously it's an arbitrary distinction, people can argue what that dividing line would be, but you could define it by revenue, or whether that when that company eventually became publicly traded, or however you wanted to do it. At that point, a certain number of board seats would be reserved for the company's employees. And that would have a couple potential effects. I mean, number one, it's going to favor the smaller competitors that don't have to comply with that requirement over the larger. I heard
Bernie Sanders talk about something like that recently.
Correct. I mean, this is not a wild idea that I pulled out of the sky. Like I said, Germany already does it. So it's not, these are sort of almost milquetoast solutions, but I tried to make more of a case as to why I believe that, unfortunately, if we don't start to look at things like this, that the alternative is going to be much worse. When I sat down with Marty,
the alternative would be?
The alternative is basically, and I outlined this in the essay, and Block does a better job outlining this than me, is the servile state, where due to it, and this is actually, I think, even worse than it was in Block's day, because economies of scale, as industrialization has progressed over the 20th century, economies of scale have gotten larger and larger and larger, and the benefit to being a large producer over a small producer has gotten more and more and more and more progressively extreme. It's also radically tilted the balance of power between labor and capital drastically toward capital. Labor is almost just like replaceable cogs at this point. It's almost useless. And I think that's only going to get more and more and more drastic as time goes on. So if you don't want to end up in a situation where we only have a very, very small number of producers and employers to which the rest of us are essentially subject, at that point, having a government is almost irrelevant, right? Because the people that are going to be in control are going to be that small number of producers who also control the employment. That solutions like the ones that I mentioned, or maybe totally different from the ones that I mentioned, there's something that I think people should be thinking about and looking at. I guess that's the best way to put it. In terms of where I think, I did tie it both in the essay and a little more explicitly in the interview with Marty to Bitcoin, in terms of the fact that I think Bitcoin is a decentralizing factor. So it is one thing that cuts in that direction, because one thing Bitcoin prevents, your oligopolists from doing is controlling the money supply, right? Do I think Bitcoin is enough in and of itself? I don't know the answer to that. I think probably not, but I'm an all of the above type guy. So in other words, I think Bitcoin's a great solution. I work in Bitcoin. I spend a lot of time talking about it, programming, it's my primary business, the whole 9 yards. But that doesn't mean that I'm also opposed to other solutions that I think would also cut in that decentralizing direction.
All right. One thing from the essay that I recall reading, you did mention the Fiat system exploding, going down the tubes, that playing a role in all of this.
Right. So Block sort of thought the idea was that without, Block was a little bit of a pessimist, in that he thought this was going to be really, really difficult to stave off, right? And I'm a little bit more optimistic in a society where something like Bitcoin is available, in that it makes the servile state a little bit less stable, because the servile state basically depends on the fact that you have to have a mechanism in place to expand the money supply to sort of create enough benefits for otherwise powerless people such that they remain consumers. This is kind of a complicated topic. The essay goes into it a little bit further. So if you remove the ability to expand the fiat money supply and you restrain the government's ability to sort of provide those benefits, which are, again, they're actually not designed to help people. They're basically designed to just ensure people they have just enough to get by, survive, and consume for the producers. If you constrain the government's ability to do that, it does make the servile state type system more unstable.
All right, now, everybody, this has obviously intrigued some people. It is linked to below. You can read the entire thing, give it a critique. It's something different, and I'm glad to have Jeff on the show to talk about it. And no, I don't. I mean, I've got a real positive outlook on things. So, but this is you decide on your own, people. You read it yourself, and it is thought provoking, to say the least. Now,
ponder that like button.
That was freaking awesome. Pound it.
He's better at this than you are, Adam.
Yeah, man, you got to take over this show, dude. And again, if you want to take over this show, or people want to take over this show, listen to his podcast. It's linked to below. They're all linked to below. Their Twitter accounts. Let's talk about something that was big in the news. I don't like specifically to talk about the fiat price because I value my wealth in Bitcoin, but of course. But there are people that are saying that now some investors, when there's an international risk out there, when a big black swan suddenly happens and then disappears, that they go into Bitcoin, that it is a short-term safe haven asset after what we saw this week with the Iran and Trump and that whole situation. There was a lot of price fluctuation that seemed to be centered around those events. So do you guys on the panel see Bitcoin as a safe haven? Was this just a coincidence what happened this week? I'll start with Simon. What do you say?
I think one of the approaches you can take is just saying, well, Bitcoin is a completely uncorrelated asset, so it's good to have it in your portfolio. Yeah. And if that's your point, then the next step is how available is it to the masses? And the normalization that occurs with the regulation, with the anti-money laundering regulations, means that the masses get more easy access to Bitcoin, and may also decide to add Bitcoin to their portfolio as an uncorrelated asset. So one of the tendencies that might happen is that if the Bitcoin availability opens up to a broader range of people, given that even banks may start doing Bitcoin stuff as part of regular investment portfolios, I'm not sure if the uncorrelation will disappear, but I'm certainly convinced that it has a role in an investor's portfolio and a relevant role in investors' portfolio. And whether you actually can link the safe haven role in specific events to the rate, I'm not certain, but I'm pretty certain that this retail availability of Bitcoin may increase due to the fact that for let's say the wide part of the Bitcoin market, there might be a bigger retail reach. But that's my take, just my shot at it.
Brad, how about you? You're in Canada. How did this go over there? Oh, well, there's an extra aspect. Okay, yeah. So in Canada, they're dealing with the unfortunate. It kept the situation still going on because of that horrible plane crash, which is just a tragedy. But what's your take on safe haven Bitcoin?
Well, I think that I don't get why that narrative has been going around. I saw a couple charts. I just put one in your YouTube chat. Masari put out a chart.
Yeah.
I looked at the comparison between oil, gold, and Bitcoin during the whole Iran scenario, and yeah, they move very correlated. Like traditionally, Bitcoin is an uncorrelated asset, but lately it's been pretty much correlated during certain events. Like things will move up and down in sequence, but Bitcoin doesn't move up and down exactly the same, by the same news and stuff like that. But some news does move things around the same. So there's debate whether or not like the collapse of the stock market would actually collapse the price of Bitcoin. Or would it, a lot of us are kind of like doomsday preppers a little bit. You know, we have a bit of tendency for like having like a hope for an apocalypse or something like that to happen, so our Bitcoin can go up. But you know, that would probably be bad for the price of Bitcoin. So any time that like fiat suffers, it's going to put pressure financially on the people that own fiat. Now, the last couple of years, especially, a lot of folks like, say, Pomp and like Tour de Meester and people are like trying to spread this asset class to institutional investors, right? There's a lot of work and groundwork being done. A lot of institutional investors and like high net worth individuals are coming in and getting a small portfolio exposure to Bitcoin as a non-correlated asset class. Now, you get someone that comes in, puts 1 to 5% of their $1 billion into Bitcoin, and they're holding Bitcoin, and then they're over leveraged in real estate and the stock market and all that, and then say there's a big economic collapse and we go into a depression or something like that, and the price of their other securities and stuff go down. Well, that's going to put financial pressure on them, on all this big money that came in, and they may want to sell their Bitcoin to dollars to deal with their debts and their financial obligations and stuff. So all of us like anarchist, libertarian, OG sort of like people who aren't these high net worth investors that got into Bitcoin early, like we're in it for different reasons, and we can hold through these massive drops. And I'm trying to like understand what the new holders are going to be doing, how they're going to be reacting because when we got into Bitcoin originally, it was a hedge against fiat money. But the new people that are buying Bitcoin, and you know, they believe in fiat money. A lot of them. Some of them closet don't believe in it, and they're just looking for like hedges with gold and Bitcoin and real estate and stuff like that. But yeah, so it's kind of complicated. I like to think about it, but I don't have an answer.
You bring up a very good point that a lot of the new people that are getting into Bitcoin now, and this is the free market, anyone can get in, they believe in fiat money. That's why they're getting into it. In fact, statistics that I brought up on, I think I have it linked to below, like now more than 20% of all Bitcoin out there is being held by custodians. People are getting ready. They want their Bitcoin to be held by traditional financial organizations that give them interest on their Bitcoin. This whole DeFi thing that's coming on, it's tempting people to not control their own private keys anymore. But we're getting more and more people who are used to that, who are used to banks, who are used to fiat. So I think that was another subject matter that I was going to bring up, but you kind of naturally led it into that more and more people, and maybe this will be a trend in the 2020s. We're screaming the top of our lungs, control your own private key, proof of keys, but we got more and more people that want 2% interest on their Bitcoin, so they give it to some company out there.
Or just that they naturally don't think in those terms, and they're coming into the space because number go up, right? They saw someone got rich with Bitcoin. They see news articles when the bull market starts, all these media things start going out, and it attracts people because they get greedy, and they come in and they're just not properly like. They didn't go down the rabbit hole of what is money and learn how central banking is a big scam and like how it's probably going to blow up one day. They just saw articles saying, wow, someone got rich with Bitcoin, I want some, and they just go get a Coinbase account and they get some Bitcoin. So they're like, I think they're called second class Bitcoin citizens or whatever they're called. They're not first class citizens, as Satoshi would say. They're not holding their own keys. They don't even care about that. So it's like maybe it's our job to educate them more on why they should have Bitcoin, not just to get rich, but like.
There's another. Sorry.
Well, I think you just said that Trace Mayer is Satoshi Nakamoto. But anyway, Jeff, you were about to say something.
There's another factor here too. I mean, if there's a real economic downturn, what you got to remember is a lot of people that have Bitcoin are going to have to sell it because they got to pay their mortgage, they got to buy diapers, they got, you know what I mean? They got all these responsibilities and obligations that are going to just have to come before Bitcoin. It's not even a matter of wanting to sell or worried about the price increase or decrease. You know, if a lot of people that got in, whether they got in early or not, there are a lot of young people that are big believers in Bitcoin. that have a huge, percentage of their, let's say, net worth in Bitcoin. If 80% of your net worth in Bitcoin and you lose your job for a year, you're going to have to sell some of it, right, to just pay for those basic necessities. So I think that's another factor that's got to be considered here as well.
But then also contrary there, like if you've got 80% of your net worth in Bitcoin and then the stock market collapses, you're not going to give a shit because most of your wealth is in Bitcoin. So you're not going to add to sell pressure for like stocks going down. So there's kind of like game theory on both sides of this. But I feel like the economic weight of the people that are coming into Bitcoin in the last couple of years would add more sell pressure if the stock market collapsed because they have a lot of their net worth in the traditional system.
Right. And you gotta remember, right. I mean, that's a good point too, because also actually a pretty common way a lot of those people would be set up is they own a bunch of Bitcoin and then the other big part of their net worth is their 401k, right? And if there's an economic downturn and they've got to sell one or the other, their 401k at work, it's got tax consequences if they want to, sell their stocks and bonds and withdraw from their 401k early. So they're probably going to sell their Bitcoin first because there'll be capital gain on that sale of Bitcoin, maybe depending on when they bought in or not. But that's going to be a much lower tax consequence than paying a bunch of penalty from, withdrawing early from their retirement account at work.
All right, we got an interesting
Lastly,
decade.
though,
oh yes,
Adam, just to give one thing on there, like we can actually measure this though. This is a way. This is not like just tea leaves. We can actually look at the dormancy of coins and see how, I think that it's called the hodl waves. I forget who came up with the chart, but there's the chart that shows the days destroyed accumulation over time and the percentage of coins that are dormant. And it's been relatively stable as far as I remember looking at it recently. So
yes,
like people are holding.
10 million Bitcoin did not move in 2019. In 2019, there were 10 million Bitcoin that did not move. That was something we should have. Well, we just talked about it. So very good, and that's getting us lined up for the halving. Now we're here at the end of the show here, definitely. But I want to, I guess, a closing question for everyone, or just everyone's take on the. Because I don't know if you guys, the way the rotation goes, I don't know next time you guys will be on the show. It might not be till after the halving because we got lots of guests to rotating in. The best guest in the freaking space on this show, by the way. Pound that like button. I bring in new people all the time. You guys have been awesome. But halving, let's just hear everybody's take on the halving. They can say anything they want to say about the halving because it is the event of the year and it is coming up in May. So Simon, what's your take on the halving?
In a year's time, we'll be at $10,000 per Bitcoin. I'll just give you this. I'll give you this as the net effect will hop up and down, and in 1 year we'll be at $10,000 per Bitcoin. So that's a measurable criterion, and I'm very curious where we get at. No, there's a. You read all this fun stuff about. I noticed the Adam Back statement that his Ripples, he sells off Ripples, buys Bitcoins. I mean, anything can happen with the rates. So I'll just give you the rate for in 1 year time, and let's discuss it then.
Okay, that's fair. That's fair. Jeff, your take on the halving? Any thoughts about it?
My probably unsatisfactory take is I'm obviously long-term bullish for Bitcoin. I don't pay very much attention to short-term price fluctuations. I definitely think that stock to flow as a concept is a very explanatory concept as it's explained in Saifedean's book. But as to any specific quantitative modeling around the stock to flow concept, I'm not saying it's good, bad, or indifferent. I don't know enough about it because it's just not my main. It's not my main concern. It wouldn't, short-term price fluctuations don't change the fact of, don't change my decision-making in terms of deciding to buy and hold Bitcoin for the long term.
Yes, you are a long-term thinker. You're not impulsive. That's what this whole show is about, baby. All right, Brad, your any thoughts on the halving?
Well, if you go by what happened over the last few halvings, we could see $100,000 Bitcoin by 2021. I mean, it could happen. I believe that we're going to see $100,000 Bitcoin within 3 to 4 years for sure. That's why, you know, I'm still in this and I pay so much attention to it and whatnot. And I still have a pretty sizable percentage of my portfolio is in Bitcoin still, because I think there's 100x. I think we're going to $1 million within 10 years. So like, I don't know specifically what's going to happen around the halving, but anecdotally, I'll give you this one. I just put it in your YouTube chat. So I have a friend who's got a pretty huge podcast. He gets like ex-presidents and stuff on his podcast, and so he's got a contact with someone at that works with the SEC. Like they do investigation or something into banks at the SEC or something. So, and he did a podcast episode with this dude last year about like money laundering, tracking money laundering at the banks and stuff. So he's a conservative guy, very like insider type of guy. And my friend sent me a screenshot of like the text message that this guy sent him FOMOing on Bitcoin. He's like, hey, did you hear that the Bitcoins are going to go up in price and 10x in the next year? Go buy some Bitcoin. So this guy that works for the government is FOMOing on Bitcoin because he's hearing about the halving. So that's a little bit of like an anecdote. It's obviously not, you know, but that's just, I in my tweet I was like, is this really happening? Like, are the government employees actually starting to FOMO on Bitcoin and they're getting ready for what they think is a big boost?
But that's a great anecdote, because last time around we had a halving hype also. Everyone knows about the halving. They don't know about the halving. They don't look what it does to a government official when he hears about it. He immediately thinks the best possible outcome. Now is that going to necessarily happen? Probably not. It's not going to 10x or whatever he said. But there's a lot of people that still got to learn about this. And I think my thing is the next few months, I think a lot of people are going to be surprised about who is talking about this. There's going to be a lot of people talking about it, mainstream type of people, and there's going to be some hype behind it, and it's going to bring some newbies into the space.
Yeah,
I think.
Like this guy thought he had special inside knowledge. He's like, oh, you know, the mining's not going to work the same. There's not going to be as many of them. The price is going to go up. You better get some now. So if that's what someone that smart thinks, you know, imagine like what you just said when the media starts to cover this about like the Bitcoin halving. And retail picks up on it. This may be the new bull market for Bitcoin, the start of the new bull market. But for one thing's for sure, the retail is not there right now, and we're still waiting for that to come back. And maybe the halving will do that.
Yeah, no, I agree with that. Retail is not; it's definitely not there right now, which is unfortunate, because some of those people in the future are going to complain. Oh, why did the big corporations buy up all the Bitcoin? Well, because you as an individual were not. You know, the regular people out there are not buying it right now. But we will see what happens. We take it a day at a time. Over the long term, I think all of us are very, very bullish. And you gotta be patient, people. Some people are completely impatient and impulsive. By the way, love that no 2x hat you got hanging there, Brad. In the
can
back.
You see that? I didn't know if that was.
Oh, yeah, that's great. You're representing that. I mean, that goes back to impulsive. There were some impulsive companies wanted to take over Bitcoin, and the people said no. We're sticking it, and there was never a 2x fork because it would have blown up anyway. That's just a reminder right there that. Take it slow. You don't need drastic solutions. There was no problem with the scaling at the time. We don't need to go back to 2017 history, but I'm always glad to see a little bit of history. Okay, well, this is it. We're going to get everybody's conclusionary remarks. Jeff, anything you want to add? Anything you want to promo? The floor is yours.
Yeah, I think we covered a lot of really good ground here today. Nothing too big to promo. If you've got retirement funds, you're looking to invest into Bitcoin, so you don't have to pay taxes on your gigantic Bitcoin gains. Check out keykeeperira.com. You can also check out the essay that we talked about here during the podcast by clicking the link down in the show notes. It'll take you over to Medium, and that's about it. I had a good time. I really enjoyed it. Thanks for having me on.
Yo, great to have you on. And just when I heard you say the word tax, I thought about the term short-term capital gains. people, that's you'll get familiar with that term if you're one of those dudes flipping back and forth your Bitcoin between fiat and all that nonsense. People have asked me, well, why can't I just do that? Short-term capital gains tax. You don't. That's not a necessity in life. You don't have to deal in that realm. All right, Simon, what's your take? Any conclusionary thoughts? Anything you wanted to add about regulation? Anything?
Okay, right. Well, Jeff, I very much appreciated your take, your article. I'm going to browse through it, and to all of you guys, I would like to extend an invitation. Next up, when you're in Amsterdam, I also do historic tours on the city of Amsterdam and the old money.
Cool.
So drop me a note, and I'll show you around. And even if you're lucky and they're still available, I've made an ICO of wooden coins made from the tree that stood in front of the exchange square of Amsterdam, and I'll keep a number of those coins safe for you. So in time, when you come in Amsterdam, come pick them up, and we'll have a good time.
All right. Well, I got to wish you a lot of luck to the Netherlands. Keep spreading the word. There are so many great Dutch people out there that are in this space, and we want the Netherlands to stay as free as possible for all the crypto companies, Bitcoin companies that are out there. But hello to all my Dutch viewers. I love you all out there. There are many. I mean, you can see any YouTuber can check any legitimate YouTuber can check their statistics and see how many Dutch people. It's quite amazing for a small company, a small country. Well, let's talk Canada real quick here, Brad. What are your conclusionary thoughts here?
Well, it was very fun to be on your show. Thanks for inviting me. I've been listening to your show for years, so it's good to finally. I don't think we ever met at any conference or anything before, but I feel like I know you because I've been watching you so long. So pound that like button for Brad Mills' first appearance on the show. And I guess I would say if anybody's interested in hearing long form conversations with comedians, that's what my podcast kind of has started to be. It's about me talking to Bitcoiners, no coiners about Bitcoin, comedian friends in Toronto and around different places. So I try to be a little bit humorous on the show, but also think about the big things about where we're going and looking at it from a non-technical point of view. So if anybody wants to check out my podcast, appreciate that. It's called Magic Internet Money.
All right. Everybody's Twitter is linked to below. Thanks a lot, dudes. This was a classic, everyone. Remember, we do this show every Friday. Who knows what time it will come on, but it does come on eventually. I am Adam Meister, the Bitcoin Meister, the Disrupt Meister. Remember to subscribe to the channel, like the video, share this video. New show here every day. Saturday night, we'll be back for Beyond Bitcoin. Shabbat Shalom. Everybody tweet it out, spread the word. All these guests will return. They rock it. See ya tomorrow, everybody. See you next week. See you whenever you return. Shabbat Shalom. See ya. Bye.